Hello and welcome everybody to the Gold and Silver Club end of week review for the 11th of October 2013, presented by myself, Phil Carr and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We will be analysing the week's performance. During the live session we are going to go over a summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week. We'll be doing live market commentary and technical analysis. We'll also be covering the week ahead, so key events looking forward, and of course answering any of your questions today too. So today's been a very interesting, this week has been very interesting indeed. The main headline news at the moment is oil gains and gold slips on the US debt deal optimism. So this week we've had the partial government shutdown in the world's largest economy hits its 11th day today. So yesterday, news of a possible deal to end the fiscal impasse that has closed the US government and fueled fears of a default led to a general risk-on attitude in the marketplace. And this sentiment allured traders out of the safe haven of precious metals into the US dollar. So we'll take a look at that very shortly. So gold this morning looking a bit weak. We've got some very interesting technical levels coming up too. On Thursday, so yesterday, the White House confirmed President Barack Obama would look at a proposal by the Republican Party to extend the debt ceiling for 6 weeks in an attempt to end the 10-day government shutdown. So the US needs to agree on raising the nation's $16.7 trillion debt ceiling by the 17th of October. A failure to do so could see the US government default on its obligations. If this did occur, it will have a serious impact on the global economic growth and result in higher interest rates for everybody across the world, according to the International Monetary Fund. On yesterday's announcement, the US dollar rallied to 2-week highs. Gold price slipped as the risk of the US defaulting on its $16.7 trillion debt obligation was lowered, and this news presented commodity traders with highly lucrative opportunity to sell short gold, as highlighted in our top trades of the week. And there were also some fantastic breakout moves on oil. So in the other commodity markets, we had crude oil prices surged yesterday to hit 1-month highs on concerns over supplies from the Middle East on news that Libya's Prime Minister has been captured by rebels. So we'll take a look at oil as well. And looking ahead, the question really is now how the US debt ceiling affect gold and silver prices moving into next week. So we'll certainly take a look at the technicals very shortly as well. So before we do so, a little bit about the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Kalsi, professional trader, investment analyst and speaker. Now, Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we both appeared frequently on financial television. So that's a little bit of a snapshot of the Gold and Silver Club, guys. So moving on to gold, let's have a look at where the gold price is just this morning. So right now, trading at $1,286 per ounce, looking quite weak this morning. So we'll take a look at that very shortly on the technicals. In terms of seasonality right now, where we are in overall seasonality, well, typically from the second week of October, we saw this last year and the previous year, we do tend to see this is a weak time of year for the metals. So we are looking quite weak technically on gold already. And given if we do get the debt ceiling extended next week, we could certainly see some further falls in gold over the coming weeks. So we'll take a look at the technicals as well. But you can see here that typically October, moving into mid-October, is a weaker time of year. And we look at the technicals, you will see a resistance level that we've got, quite a key downward trend line, and also some key levels that we just broke through yesterday as well. So we look like we're heading lower at the moment. So I'll show you that on the charts very shortly. Moving on to the US dollar index, we can see here where the US dollar index spiked this week. We have had a downtrend in the US dollar index. We have actually come to 2-week highs this week. Over the last 48 hours, we spiked up. So if we continue to find some feet with the US dollar index, if it does manage to get above this downward trending channel, we could then see again more pressure on the metals as well. So we'll be keeping a close eye on that. I'll just have a look this morning on our Reuters platform to see what the US dollar index is doing right now. Before we do so, just going to go through our top trades of the week. So we've had a lot of activity actually on gold and oil this week. So oil in particular has given a lot of day trading opportunities. So first of all, going back to Monday this week, we had a nice opportunity when we came up to a nice level of resistance on WTI. Nice setup that we had here once we broke through a major trend line as well. This was a sell at 102.80 for an exit at 101.74 for 106 pips, shorting WTI oil. The risk on that 60 pips, so $600 risk for 106 pips, $1,060. Profit on each lot traded there, so for a 2-to-1 on WTI. We also had a really nice setup on Brent as we came back. We retested some key moving averages and a resistance zone. So if you look at Brent oil, until yesterday, it has actually been channeling the last 2 weeks between very key levels of support and resistance, just moving between those levels, creating a lot of day trade setups. It finally broke out yesterday afternoon, but previous to that, earlier on in the week, we've had some really nice opportunities, and this was a break of a key level at the 108.43 level, got triggered at 108.39, and just came down to support at 107.52 for 87 pips. In fact, I'll show you that same trade again that we took on the oil inventories because we had exactly the same setup for exactly the same profit target and entry. So the risk on that was 45 pips, so $450 risk for 87 pips, so $870 profit on the trade for a nice 2-to-1 on Brent. We had gold this week. We had a nice sell short opportunity. So this was selling from 13.15 on Tuesday evening. We got a nice setup on this resistance channel, which you can see on the chart. We then produced a nice inverse hammer from there as well, and we broke the low of that the following morning. And you can see here where we came down nicely to 12.97 profit target for 180 points. So 100-point risk on that. So each lot traded $1,000 risk to make 1,800 for a 2-to-1 on gold. In fact, we're in another position at the moment, which we'll probably update you on next week, which is another shorting opportunity at the moment. I'll talk you through that on the technical shortly. Moving on to crude oil inventories. This was on Wednesday. So again, 108.43 level breaks, 107.52 profit target. So with the spread, we got triggered at 108.39, came out at 107.52 for a quick, it was 90 pips and 87 pips minus the spread there. So 45 pip was a risk. So $450 risk for 87 pip profit, 870 profit for a 2-to-1. But the thing about these trades is they're so quick. So we're in and out within our profit in about 45 minutes, which is fantastic. Crude oil inventories, actually, we reached our profit target within a much shorter time frame once we've broken through that 108.43 level. And then the crude oil inventories this week were over 6 million barrels in inventory, which was much more than predicted. I think it was 1.4 million was the forecast. And we saw immediately, because there'd been a big surplus of oil in inventories, we saw immediately the price break lower and hit our profit target. And finally, WTI oil. This was a trade from yesterday, and that, for those of you who trade WTI oil, you might have seen this. 101 level is providing extremely strong support here at the moment. We came within a whisker of being stopped out of this trade, but it held again. It's held now 4 times the 101 level of big tests of this major level of support. So obviously a lot of buy orders going in at that level, and traders taking profit on their sell shorts at this level. From that point, after the FOMC announcement, the statement which we had on Thursday, we then actually saw the market stabilize, and yesterday we had a huge surge late morning into the afternoon on WTI oil, and we came up to our level of resistance. Our key level there at 103.24 is where we took profit for 198 pips, 30 points risk on that for $300 risk for 198 points. That was pretty tight risk to reward. We got over a 6-to-1 on that trade just yesterday, and you'll see actually it's just hit that resistance and it's coming back down again. So you can see it's just channeling very nicely between these key levels of support and resistance. So you're going to want to watch the 101 level, and if that finally does break over the course of this week or next week, we're going to see a lot of stop losses get triggered, and we'll probably see a nice, at least $1 move down. But at the moment, that level is holding really well as a level of support. Okay, so what we'll do, guys, we'll move on to some live technical analysis. We start off, just look at the Gold and Silver Club Reuters news trading platform. So let me just share my screens and bring that across for you. Okay, fantastic. So at the moment, you should be able to see the Reuters platform. So the bottom right-hand corner here, this is the US dollar index. You can see the big spike that we had this week to 2-week highs. Today, actually, the US dollar index, it's finding a little bit of weakness. Just today, you can see we're actually coming down ever so slightly. It's early days yet. It's only 11 o'clock London time at the moment. But you can see just got a little bit of consolidation where we are at the moment. So we're still in an overall downtrend on the US dollar index. So it's still got more work to do. But we did definitely have quite a big surge this week. You can see here the top movers of the day. At the moment, the commodity currencies, New Zealand US dollar, Australian US dollar doing very nicely. Silver, fairly neutral today. Gold, the biggest, out of the commodities there, it's the biggest loser of the day, down 0.6. As well as oil is getting a bit of a retreat today, and CAD looking fairly neutral. So, we'll move over to the charts and we'll talk you through that now, key levels that we are currently looking at. Okay, so here we have, this is gold that we have at the moment. So on gold, you can see at the moment on the daily time frame, we've got this big inverse hammer which has formed. We broke through a key level of support yesterday, 1297 on gold, and you can see really it's looking pretty, it's not looking very strong today at all. So I would, looking at key levels looking forward, you can see first of all is this big resistance channel on gold, downward trending resistance channel, which we found support at. Now we've found it 1, 2, 3, 4 bounces off this resistance channel. So if you've not got that on your charts, you want that on your charts. And really, in order to take longer term buy positions, you need to wait for the price to break out of this resistance channel. At the moment, we do look like we are heading lower. Next key level is going to be 1277 for gold, which is not far away now. It's only about 70 pips away. To the downside where we are at the moment. You can see we've got weakness on the daily. You've got a nice inverse hammer there, which signifies you could go lower here. And if we do break 1276, the next level of support here is going to be 1252.74. So pretty much 1253 is going to be the next key level. Those are the two levels we're going to be watching very closely just today on gold. And as discussed, seasonality this time of year going to October is generally speaking a weaker time of year, just based on the 32-year seasonality chart, is a weaker time of year for gold anyway. And the fundamentals, if everything gets cleared up with the debt ceiling, aren't looking great for gold at the moment. So do make sure that you are able to trade market both ways if you're trading gold and take advantage of sell short opportunities at the moment on this market. Moving over to silver. Silver consolidating, looking a little bit weak today as well, to be honest. We're starting to break through to a Fibonacci level just this morning. We can see this whole consolidation zone to the left. If we continue, if gold breaks this morning further down, what we'll get is a move lower with silver as well, which we could come back down to the next level of support, 2083 and 2070. I would certainly be looking out for that on silver. We can see here we had a failed move to break out of 2247 Fibonacci level last week on this was on Tuesday that we had the move up there. We didn't break above that, and we've slowly just come back to support, but now we're starting to break lower. So again, silver looking quite bearish at the moment. Those are key levels to be looking at on silver just this morning. Moving across to WTI, so you can see really closely how well this 101 level is holding on WTI at the moment. It's providing quite a lot of opportunities. Well, it has provided some good buying opportunities at this key level. You can see how well it's been supported. We are still in an overall downtrend on WTI, similar to gold really. We've been in this downward trending channel over the course since August. You can see we've been in this downtrend after things quietened down a bit with Syria is when we started to see the market come down lower. So really the key level to be looking at the moment, we're just channeling between 101 to 103.42 and 104 level at the moment. So these levels is where we're finding resistance. This is where we're finding support. Going to be very interested in WTI if we get a break of 101, because there's not much support now. If we break that, stocks are going to get hit. You know, traders are going to start selling this market short and probably move down $1 to around about the 99.30 level. So you want to be watching that on WTI, possible opportunity. You can see we're getting lower highs here as the market is coming down. So there is also a downward trend which is starting to form here too. Just a very simple trend line there just to show you that. So we are getting some pressure here on WTI. So that's definitely one to watch. Looking at Brent oil is faring better actually. We had this big surge upwards yesterday. You can see here where several times we've broken through the 108.43 level, and then we've just come down to the 107.52 level, which is providing support at the moment. So any short sells are being bought back very quickly at the moment. So the market is channeling now. We've come up to, again, this level of resistance at 111. You can see at the moment we've got a hammer forming on the daily time frame. So we are got a bit of indecision here, inside candle forming on the daily. So we'll see if we're going to break above 111 or if this is going to be fairly low in volatility today, offering trade opportunities as we come into Monday next week. We might get a retest, come back down and test previous support, previous resistance, which now turns support. In order to get higher in Brent at the moment, what we do need to do is break through 111 here. So we need to break through this key level of resistance coming back to mid-September in order to get to 112 and higher at the moment. So Brent looking more bullish than WTI at the moment. Definitely one to watch. There's been a lot of day trading opportunities on Brent and WTI over the last week. Okay, so we'll move on to the commodity currencies. So next, New Zealand US dollar. New Zealand US dollar really stuck in a range at the moment as well. Let's just look at this. We've got a whole larger area of consolidation here that the New Zealand US dollar has been stuck between. Got a level of resistance just above. Whilst it consolidates, we do have, you can see any moves lower at the moment are being rejected. We saw yesterday that we've got a nice hammer form on the daily time frame back up to resistance. We're getting a little bit of selling at that level of resistance at the moment. So no real clear breakout at the moment. We'd really like to see it get above 0.837 and then retest 0.8438 above in order to have clearer confirmation for longs at the moment. But it just seems to be stuck in a consolidation in a range right now. Moving on to Australian US dollar. Australian US dollar is actually moving quite nicely. We're still within this uptrend at the moment. Every rejection, every time we're coming back and pulling back to this key Fibonacci level at 0.937, we are seeing that get rejected. We're seeing buying coming into the market. We're looking for the price really to come back up to Fibonacci level above and retest here at 0.950. So it looks like it's on its way at the moment. It's not got too much further to go now. It's one of the setup that we've been in this week as well. So we'll report back to you on that next week. We're looking for about another 25 pips to hit our profit target on Australian US dollar, but we've had some nice buying opportunities along the way as it's continued to grind higher on Australian US dollar. And finally, looking at USD CAD, we have hit USD CAD profit targets this week too. We can actually see here where we've got some Fibonacci clusters here of some key moving averages. We actually got a spike this week. Looking at the weekly time frame on USD CAD, which we've discussed previously, we've got this big dragonfly doji, which was produced 3 weeks ago at a key level of support, which was supported by the key 200-day moving average as well on the daily time frame during the FOMC announcement where they said they weren't going to taper. So we saw this get supported, then we've just seen the market channel, come down, retest Fibonacci's and get supported, and we finally got that surge we were looking for and have hit our first profit target on that as well, which was at 1.0414. So at the moment, we are expecting a little bit of consolidation, which we're seeing on USD CAD at the moment. Still looks supportive. It's above all of its key moving averages at the moment, so it's moving into a bullish market, USD CAD. So we could see more upside here on USD Canadian dollar as well, but we might get a little bit of consolidation before we can break higher. Next key levels to really break is going to be 1.04193. Okay, so that's really the summary at the moment. So there's quite a lot to be looking at today. Definitely gold's going to be one to watch, see if it's going to come down, hit 1277, see how it reacts if once it gets to this level, if we're going to get a break and back down towards 1252. Silver, you want to look for the same, see if we're going to get a break of this consolidation zone Silver's got more work to do than gold. I mean, gold's looking weak. It's already broken past really key previous areas of support here, so it looks like it's heading lower. Silver, one to watch though as well, and also WTI, watch out for the 101 level, see if we're going to break that or get a retest of that today. And Australian US dollar looks set to get to the next key resistance above. So quite a lot going on. So let's have a look at what major news that we have coming out over the course of today and moving to next week too. Okay, so moving into next week, the major news that we have coming out is today we have CAD employment change. So employment change measures the change in the number of people employed. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. So that would affect anybody trading USD CAD, and that's important because the CAD is correlated also to oil prices. Later on today, we also have 2:55 p.m. and 9:55 ET. We have the US Michigan Consumer Sentiment. So the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. Okay, so you've got the preliminary and the revised. The preliminary data does tend to have a greater impact. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And of course that's important because the USD is inversely correlated to gold. Moving into next week, next Wednesday we have a US core CPI. That index measures the change in the price of goods and services from the perspective of the consumer. And that's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And then moving into next week, we do of course have crude oil inventory. So if you are around during the day and you have availability to trade these announcements, very worthwhile. We caught a very quick 90 pips this week, or 87 pips if you take the spread away. So US crude oil inventories, that data report is 3:30 p.m. GMT every Wednesday or 10:30 a.m. ET. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. On Thursday, we have US natural gas storage. So that's again 3:30 p.m. GMT, 10:30 a.m. ET. The Energy Information Administration, they provide natural gas report measuring the change in the number of cubic feet of natural gas held in underground storage during the previous week. So while that is a US indicator, it does tend to have a greater impact on the CAD as well, due to Canada's sizable energy sector. So that's important because the CAD is correlated to oil price. And next Friday is currently expected for the US non-farm payroll. So due to the US shutdown, non-farm payroll data is now expected on the 18th of October, and that measures the change in the number of people employed during the previous month, excluding the farm industry. So job creation, of course, is the foremost indicator of consumer spending and economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Okay, so those are the major news announcements we're going to be keeping an eye on for the commodities market and the commodity currencies today and moving into next week too. So if you, of course, if you would like to take your trading to the next level and find out more about our exclusive live trading room program and our Gold and Silver Club exclusive membership packages, you can just find out more, just request more information on the Gold and Silver Club live trading room program. Go to www.jointhegoldensilverclub.com or contact us at our London office at +44 0207 193 0403, our New York office at +1 646 808 0403, or our Johannesburg office at +27 11 083 8403, or of course email us at office@thegoldensilverclub.com. And finally, do make sure you take advantage of our newsletter. So you can subscribe to our newsletter at thegoldensilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay guys, and here's the form to find out further information. Okay, so if you do need to get in touch, do get in contact on the details on the screen there. Otherwise, we certainly wish you good luck for the rest of the day's trading. Have a great weekend, and we will see you at the same time next week. Okay, so take care everyone, and we'll see you on the next one. Take care. Bye-bye.